Sarepta Therapeutics is gaining strong traction in market discussions following the inclusion of Duchenne Muscular Dystrophy, DMD, on the U.S. newborn screening panel, a development widely viewed as a major long term catalyst for the company's flagship gene therapy, ELEVIDYS. Investors and industry observers are highlighting the strategic importance of earlier diagnosis, which could meaningfully expand the eligible patient population, accelerate treatment timelines, and ultimately drive higher adoption rates over the coming years. Many in the community see this as a structural tailwind that strengthens Sarepta's competitive positioning in DMD and reinforces the durability of its revenue base. Adding to the bullish narrative, Sarepta filed an SEC report outlining preliminary full year 2025 net product revenue of approximately $1.86 billion, alongside a robust year end cash and cash equivalents balance of $953.8 million. These figures reinforce the company's financial scale and near term liquidity. Previously, at the JP Morgan Healthcare Conference, management pre-announced fourth quarter net product revenue of $369.6 million and reiterated a 2026 ELEVIDYS sales floor of $500 million, signaling confidence in sustained commercial momentum despite ongoing scrutiny around the gene therapy space. That said, sentiment remains far from one sided. A vocal segment of the investor base continues to question management's capital allocation choices and broader financial strategy, particularly in light of past dilution, debt activity, and execution risk tied to high stakes clinical and regulatory milestones. Elevated short interest underscores this caution, reflecting lingering doubts around valuation, reimbursement dynamics, and the potential impact of competitor data or regulatory developments. As a result, Sarepta is emerging as a high conviction, high volatility name. Bulls are focused on newborn screening as a transformative inflection point for ELEVIDYS and long term growth, while skeptics are waiting for clearer proof that operational discipline and financial decisions will fully align with the company's expanding commercial opportunity.
Okay, the stock is down 11.67%. This is Monday, the 12th of January 2026. It looks like it has already surpassed its 50-day average. Quite a big day for the stock, it seems. Okay, let's see what we have on its daily chart. On the line trend, severely bearish. Let's see what the extrapolations are saying. It's saying that we might have a consolidation from tomorrow, the 13th, up till Thursday, the 15th. Then after that, it's uh, it's going to continue. It might decline. Might decline further towards the 23rd of January. Ultimately, it's just saying that it might go into a consolidation. What is extrapolated, as a matter of fact, up till the 20th of February is a consolidation. In the midst of all of that, a bounce is expected from the 26th of January. This extrapolation is pointing to so many days ahead. There's no guarantee that it will be the case at all. Yeah. So as things stand right now, projections are saying 27.17, 29.85, 31.51. Momentum is expected to begin to decline from Thursday the 15th. Okay. Let's see what we have on its 4 hour chart. Before we do that, let's see the weekly chart. Let's see whether there's anything positive there. Here we have, it's positive here. A bounce is expected from next week. So ultimately, a bounce is strength is expected to kick in and remain that way up till the 2nd of March. Okay, we'll see how all of these will align. Projections on this date on this weekly chart are saying 29.99, 35.68, and 39.20. But we also have to point out that it has some really, really, really negative prices. We have negative 103.08, negative 152.12, negative 182.42. So in the midst of the very short term ambitious or bullish extrapolations, they're also very, I mean, really, really, I mean, if you're talking about negative 182, then you're talking about something really fractional. I mean, that I don't need to explain that. That makes that tells a lot. That tells you a lot. Yeah. Obviously, stocks don't trade negative, so that is referring to some really fractional prices. So we have on the 4 hour chart lower prices up till the pre-market. So as a matter of fact, lower prices going all the way towards the 20th of January. It's indicating that they might attempt to bounce from tomorrow, the 13th, but may be rejected. Yeah. Momentum is already depressed and is expected to remain subdued up till the 14th of January. It might attempt to bounce, but may not be enough. But all towards the 20th of January, it's also expected to pick up as well. Yeah, and aligning with what looks like a bounce that is expected to pick up from then. Let's see what the market grid is going to give us in terms of prices for on this 4 hour chart for SRPT. Okay, let's see. Okay, we have as low as 20.04, so it's currently at 21.09. This is where it is in between the resistance and the support. So the odds of it printing lower prices is there. It's not in the support zones yet, but it's something that might happen as well. Okay, yeah. So just see what you make of SRPT, and I'll definitely continue to update you. Thank you very much for watching this video.